Do you ever feel like you constantly have to zoom in and out of the charts just to get the right view? You zoom in to find the detail, and then you zoom out to make sure you're seeing the big picture, and somehow it still ends up wrong. But what if I told you there's a simpler way? A way where all you have to do is wait for one break of structure, mark it off, and enter your trade. I'm about to show you the easiest way to mark off your key areas of interest when it comes to trading. Let's get into it. All right, y'all, so it's two ways where I find my areas of interest in the market. There's two type of trading setups. I have going with the flow of the market, and I have my counter trend trading opportunities, which we will be breaking down today. So first, what we're going to do is going with the trend of the market. When we're going with the trend of the market and when it's time to find our zones, I only use 4 time frames in order to take every single trade. I have the daily time frame where I identify which way the market is heading. I have the 4 hour. Again, I identify which way the market is heading, but also we identify our key zones. Next, we have the 30-minute time frame and the 15-minute time frame for our entry time frames. All this stuff is in the Discord if you want to check it out, link in the description. So knowing that I have trading with the trend and I have counter trend setups, and I'm looking to identify my zones. When I'm looking to identify my zones, I want to see this thing, right? When price on the daily time frame or the 4 hour, in this case, since we are doing what? Going with the trend, we use the daily time frame first to identify the market. So on the daily time frame, you can see clear as day that this price action, we are bullish. But most importantly, we have recently performed a break of structure, the initial breakout towards the upside. Next, what do we have to do? The same thing on the 4 hour. We have to identify the trend, making sure we are in sync with the daily time frame, and then we find our zone. And what do I mean when I say being in sync with the daily time frame? Of course, I mean going in the same direction, but most importantly, when the daily presents me with the initial breakout, I want to see the 4 hour presenting me with a initial breakout as well, showing me that both time frames are in sync. After we identified the market, we're bullish, we see that. And then 4 hour, again, we identify the market, which we just did, we are bullish. How do you find your zone? Well, simple as day. I know that the daily time frame is bullish. I know that my 4 hour time frame is bullish. We're both in sync. Now the question is, where can we see this daily time frame retrace to before we have the next extension back towards the upside? Well, on the 4 hour time frame, since we already are in sync, we know that we're in sync with the daily. My job is to now draw out my structure and look for the last break of structure price presented me with. So now we see that price is overall bullish on the 4 hour time frame. We have the overall break of structure happen here, continuing this move towards the upside. But our last structure break inside our overall structure happened around here. This is when I will grab a box tool. I will drag this area out like so. On the 4 hour time frame, it's clean as day. We have the recent break. We're using that recent break as an area of interest. But on the daily time frame, if we continue to drag it over, it would look like we are in no man's land. But that's just simply not the case. We're not looking at the daily time frame for our area of interest. We're on the 4 hour time frame to find this area of interest. Why? Because we are simply trading with the trend of the market. The daily is already identified the way the market is heading. The 4 hour is matching up with the daily time frame, heading in the same direction. We now need a zone where we can retrace to. And simple as day, if I'm a break and retest trader, I'm looking for the break, the retest, and the continuation, right? The daily time frame performed the break. Now it's up for the 4 hour time frame to show me the retest of the recent structure break. We know when price retraces back down towards the 4 hour time frame to have the retest of its recent break of structure. This will also allow the daily time frame to have the retest of its break of structure, probably dropping a little bit underneath that zone to allow the retest of the 4 hour structure break. Our job then is to wait for the shift of structure on the 15-minute time frame, allowing us to see price go from bearish to bullish, because like you all know, the 15-minute time frame, in order to have the retracement back down towards our higher time frame structure, such as the daily and the 4 hour, typically it will go from bullish to bearish in order to allow the higher time frames form the retracement. So once we tap back into, we just wait for the next switch of structure back bullish to continue to ride this trade back towards the upside. And most importantly, when price has the rejection of this 4 hour zone, we want to make sure we are above this zone, the 4 hour time frame, and also wait for price to get back above our daily zone. This just allows us to see that we're not in any type of resistance area. Price has recently broken back above this area of resistance, and we can see price continue this move towards the upside. So let's get into the charts so I can show y'all just a full rundown on how this works. With USD CAD, clear as day, you can see that the market is bearish. And what I want to show y'all is that I have these tips and tricks for a reason. So I have 10 market conditions. I have 5 market conditions when price is bullish, and I have 5 when price is bearish. We can obviously see we have 2 flow of the markets where we're looking to go with the trend because price is moving in this bullish structure. And then I have 3 counter trade opportunities when we're going against the trend, trying to catch a sell when price is bullish on the higher time frames. Right now, you can see clear as day, price is bearish, which means we will be using this setup. You can obviously see price is bearish. Price is bearish. Okay, cool. So now since I know that price is bearish, what time frames can I use to help me find an entry? Well, I have trading tips for a reason. I know that if I'm in setup 1 going with the trend of the market, I will be using my daily 4-hour, 30, and 15-minute time frame. But say if I'm in a counter trend setup, I simply change that to now using the 4-hour, 1-hour, 15-minute, and 5-minute time frame. How do you know if you're in a counter trend setup or if you're going with the flow of the market? Well, if we're going with the flow of the market, our daily and our 4-hour time frame are going to be in sync. Like I just showed you, I want to see, oh, I deleted it. Like we just talked about, the initial break of structure, I want to see the same initial breakout on the 4-hour time frame. And if it doesn't happen on the daily and the 4-hour, I want to see the initial breakout on the 4-hour and the initial breakout on the 1-hour. We're going to get into that later. So right now, the daily time frame, we can see clear as day that price is what? Bearish. And we can see that price recently gave us the break of structure with a retracement. And if I drag this out over here, we can get an overall better look of the market. We have the break of structure happen around here. We have our lower high being here. Oops. I have my lower high being here. And then I have my lower low being here. So clear as day, we can see that price is bearish on the daily time frame, but we are above this area of interest. This is fine because say if price on the 4-hour time frame is bullish, we can look for a counter trend opportunity, catching buys back towards the upside since we are above this daily area of interest. But say if the 4-hour is still bearish, we simply wait for price to get back below our zones, back below here, and we continue to ride this trade towards the downside. Let's identify if the 4-hour is in sync with the daily time frame being in a bearish trend. We see that the daily is bearish. Let's go towards the 4-hour. We can see clear as day the 4-hour time frame is also in this bearish trend. And on top of that, you can see on the daily time frame when it initially gave us this break of structure, you can see how the 4-hour also had the break of structure as well, being in sync with the daily time frame. This is perfect because now we know that we're going with the trend of the market. What time frames do I use? I use the daily, 4-hour, 30, and the 15-minute time frame. Okay, cool. So now I know that the daily and the 4-hour is bearish. Where can we see an area of interest to where price can retrace back to, reject, find some type of entry, and ride this trade towards the downside? If we go back towards the cheat sheet, when we're going with the trend of the market, our job is to identify the market on the daily time frame, identify the market on the 4-hour time frame, and also identify our zone. Well, we identified that we're bearish on the daily, we identified that we're bearish on the 4-hour, we are both in sync, and now our job is to find our zone. How do you find your zone? Well, you simply draw out structure and you look for the last break of structure. We can see clear as day, price go from this bullish to bearish trend due to the breakout of these lows. And again, if I drag this out over here, before I drag this out over here, I like to call these pivot points. Why? Because until price gives me a break of these highs or these lows, I'm not really worried about all the pivot points that's going on inside the overall trend, because price is not showing me a higher high or a higher low or a lower low and a lower high. Why? Because I don't have a break of structure. Price is just moving in my overall bullish trend. So I'm not worried about anything. Price is bullish at the moment. When price went from this bullish to bearish trend due to the breakout of these higher lows, I saw that price is now in a bearish trend. And then I know that the break is happening here. But where is the last structure break? The last structure break is around here. So this is when I grab my box tool, I put it at the last structure break, and I drag it towards the left. My objective now is to count out if we have 2 or more rejections towards this area of interest. If we do, we use it because it solidifies this area as a well-respected area. And so if we look towards the left, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You could count this as in the vicinity 12 rejections towards this area of interest. Well over 2 rejections. Where are we at? We have identified the market. We have our zone. Now we're waiting for the switch of structure. I'm not going to break down the 30-minute because if you want more on that, you would just have to go to the Discord. I'm trying to keep this short and simple for you all to show you how easy it is to just find your structures, get in with your structures, and allow the rest to happen. So right now, we're waiting for the 15-minute time frame switch of structure. Like you all know, in order for price on the daily and the 4-hour time frame to form this retracement, the 15-minute time frame, it has to go from bearish to bullish in order for the higher time frames to form that retracement. And since we know price has to go bearish to bullish to form a retracement, what has to happen next in order for price to go back in the overall trend of the market? Well, the 15-minute time frame has to go from bullish to now back bearish. Simple as day. And you can see where we had the initial break of structure happen around here. A lot of people will be like, well, this is a good time to enter based off of this break of structure. We have a beautiful break, stops just above, and then your targets, since we're using, if we go back towards this, since I'm using my 4-hour to identify my zones, I'm using my 4-hour lows to place my take profit. So you would be saying, hey, this is a good setup. We got the break of structure. I got my stop loss. I got my take profit. I'm telling you, this is a horrible trade. Why? Simple as day. Yes, you are underneath your area of interest where you're looking to take a trade. But if I zoom out and I look towards the left, you can see that price has a hard time breaking through this area of interest. What is this area of interest price is having a hard time breaking through? If I go back towards the daily time frame, do you remember when price broke back above this zone? What did we say? I have it in the trading tips for a reason. You want to see price below this zone because easy, clear as day, price can use this zone as support and take buys towards upside. And since I don't want to see buys because the daily and the 4-hour are in sync, I know that I'm still looking for sales. I just want to see price get back below that zone. On the daily time frame, we're not below this zone, meaning that you should not take a trade just yet. Why? Because you're above the daily structure. If you continue to wait, so let's delete this. Even though this is a good trade because you have the break, this is a bad trade because you're still above your zone. Be patient. Just be patient. So us being patient, we continue to wait and we just wait for the next continuation breakout towards the downside. And what happens? Boom, price presented us with the continuation breakout, breaking past these lows. Now what is taking place? One, price is below my 4-hour zone and we are also now below my daily zone. I found my entry, like we said, since we used the 4-hour for our entry zones, we use our 4-hour for our take profit. And you target these lows. And when I'm targeting my take profit or I'm setting up my take profit and stop loss, I'm looking to get a minimum of a 1 to 2 risk to reward in return. I am an intraday / swing trader. I'm not looking to get a 1-to-1 in return because I'm not looking to get back what I risk. If I risk 100, I'm not looking to get back $100. I want to get double in return, meaning I want to get $200 back. Simple as day. It's nothing more, it's nothing less. So I target these lows. As long as price give me a minimum of a 1 to 2, I take my trade. And you can see clear as day, price hit targets, easy as day. And now I have another setup. Where is it? Right here. Another setup. Again, it's like the same exact thing, going with the flow of the market. So we're about to, hold on, I'm gonna go in replay mode and we're going to break this down. And what I'm gonna do with this one is I'm going to show you all what it looks like. At the end too, I'm gonna show y'all like a live trade breakdown that I'm looking to enter tonight. I'm gonna walk you all through what I do on a day-to-day basis. I'm gonna talk to you all, but I'm gonna move faster than what I just did. So right now my objective, I'm on the daily time frame. I have to identify the market. On the daily time frame, I can see price is in this bearish trend. and price has recently presented me with the break of structure, and price is forming this retracement. If I drag this out towards the right, I have the overall break happening here. I have my lower high and I have my lower low. Where are we at in the market? Well, I am above my zone, which means what? I should be looking for a counter trend setup. This is true if the 4-hour time frame is bullish. If my 4 hour is bullish and my daily's bearish, we are in a counter trend scenario. But if my 4 hour is bearish and my daily's bearish, we're still going with the flow of the market. So I know that the daily's bearish. I know that we're above my zone, but we're still okay as long as price on the 4 hour is in sync. So the daily time frame is bearish. Let's go towards the 4 hour time frame. The 4 hour time frame, clear as day, is in a bearish market. If you can't see, let's draw it out. You can see how we were bullish, priced in with bearish due to the breakout of these higher lows. We then have the continuation move towards the downside. Price then has a flip going from bearish to bullish, and then price had another flip getting back bearish due to the breakout of these higher lows. So now we see that the daily's bearish and we see that the 4 hour is bearish. This is perfect. Going back towards our trading tips, our objective was to identify the market. We've done that. Identify the market on the 4 hour. We've done that. Now it's time to find our zone. Okay, cool. How do you find our zone? Well, you just look for the last break of structure. On the 4 hour time frame, we can see clear as day the last break of structure happened around here. This is when I grab that box tool, I put it at that last break of structure, drag it out towards the left, and we count the number of rejections. We have 1, 2, 3, 4, 5, 6, 7, 8. And if I drag it out towards the left, we'll probably have more. So right now we're looking at 8 rejections. It's well over 2 or more rejections, which is what we look for. So this is good. I can use this zone. Now what's next? Well, next will be the 15-minute switcher structure, since we're not talking about this. 15-minute switcher structure. Well, if I go towards a 15-minute time frame, we can see that what happened. Price went from bearish to bullish to allow the retracement to happen. And now we're simply waiting for price to go from bullish to bearish in order for price to continue this move back towards the downside. Right now, we are above my zone on the that 4 hour zone, so I'm not really interested in price. And you can see clear as day, price is bullish. I'm not really interested. I want to see price go from bullish to bearish while we are underneath my 4 hour zone. And also, this is far. Hold on, y'all. Underneath that 4 hour zone and as well as our daily zone. And at the moment, we're only underneath our 4 hour zone. If I press play, you can see our price then breaks back underneath our 4 hour zone. This is good. I'm still not interested because price is still bullish. Once we can have this break of structure, then I will be entering my position. So we continue to wait. Boom. You see price presented us with the first break of structure around here, breaking past these higher lows. You would possibly think this is a time to find your entry. No, it's not. Why? Because we are simply above our daily area of interest. Price can easily, like we've done in the past, find support, and continue to move towards the upside. I don't want that to happen if I'm looking for sales. So you simply wait for price to do what? Break below, treat it as resistance, treat it as resistance, resistance, resistance. Okay, cool. Continue to be patient. So we continue to be patient and we wait for the next continuation breakout. Boom, you have the next continuation breakout. And what happens? Price gets back below this daily zone. It's already below your 4 hour zone. And now price is forming this huge rejection towards this area of interest. If we press play, come on. Come on. Hold on. Let's go to the 4 hour. Boom. Simple as day, bro. We're just following the trend. Follow the plan. I have a set rule book for this whole thing. It's not hard. Finding your area of interest, finding your trades, it's not hard. We just tend to overcomplicate it because we're trying to find the perfect setup. There's no such thing as a perfect setup. If you see it, if it meets the rules, we take the trade. Simple as day. So now I want to show y'all a counter trend. I think I have like 3 counter trend setups. Keep in mind, I don't recommend taking counter trend setups if you are not a advanced trader. You have to be some type of an advanced trader to identify the market better than what a beginner trader would, right? Higher your probabilities of taking these trades and executing these trades, right? So a counter trend is horrible. I never recommend going with a counter trend trade, but I do say take it if you can higher your chances and higher the probabilities of you winning that setup. Let's get into a counter trend scenario so I can show y'all what I'm talking about. So this is going to look a little ugly because I tend to leave up all of my past trades. So it's like a journal, right? I journal all of my trades, so I'm going to leave all this stuff up. I'm gonna draw it out. Y'all bear with me. We're about to get through it. Our objective, we're on a daily time frame. Identify the market, okay? Starting on the daily time frame, let's get this. Starting on the daily time frame, we can see clear as day price is bullish, and price had a retracement getting where? Back underneath the zone. If I drag this down here, you can see we have the recent breaker structure happen around, let's drag this out a little bit more. Recent breaker structure happen around here. We then have our higher high being here, and we have our higher low being here. What type of setup are we in? We know that we're bullish. We are underneath our zone, possibly a counter trend setup if the 4 hour is not in sync. Going around here, we can obviously see price is bullish on the daily. Okay, good. Are we below or above our zone? Well, we're not here. We're below. We could be a number 2 or number 4. Well, are we at the higher low? No, price is not at the higher low. So we're looking like we're at number 2. We're still at this area of interest. Price is not at my higher low, and price is not above. Well, if price is in sync with the daily time frame being in a bullish trend, we are still at number 1. But if price is bearish, being in a bearish trend, we will now be looking for a counter trend opportunity to take trades at these recent resistance level. So we know that the daily is bullish. Our objective now is to find if the 4 hour is either bullish or bearish. Well, as I drop towards the 4 hour time frame, we can see clear as day. I know you all can't see, I'm about to draw it out for you. We can see clear as day that price is in a bearish trend. Price was bullish, then it went from this bullish to bearish break of structure. So now we see that price is no longer in a bullish trend. Now we see that the 4 hours bearish and the daily's bullish, which means what? We are in a counter trend setup. I'm looking at number 2. Okay, so so now knowing that we're in a counter trend setup, we're at number 2. What time frames do I use? I use the 4 hour, 1 hour, 15 minute, and the 5 minute time frame to identify my zones and structures and so on and so forth. We're only using these 4 time frames. So now if I go back towards the charts, since I know that the daily and the 4 hour are not in sync and I'm looking for a counter trend opportunity, I still want to be below my daily zone when I'm looking for setups. Like no matter what, if we go back towards these pictures, you can see we have setups at our zones. We have the recent break. We're either at the recent break of structure, we're at the highs, or we're at our lows. No matter where we're at in the market, I'm at 3 points: the recent break, our higher high, or my higher low. Right now, I'm at our recent break, and I want to see price, since I am looking for a counter trend opportunity, I want to see price get below this zone. So my daily's bullish, which we just said, the 4 hours bearish. I want to see if my 1 hour is bearish as well, in sync with the 4 hour time frame. If I go towards the 1 hour time frame, we can see clear as day price go from this bullish to bearish trend due to the breakout of these higher lows. And if I go back towards the 4 hour time frame, you can see when price performed this initial breakout, breaking past the structure, the 1 hour did the exact same thing. Hold on, y'all. So we can see clear as day when the 4 hour initially gave us this break of structure, the 1 hour did the exact same thing. We know that we are in sync. We already identified the market on the 4 hour. Our job is to identify our zone. Where can we see the 4 hour retrace back to? Well, since we know the 4 hour and the 1 hour are in sync, we do the exact same thing we did on the 4 hour with the 1 hour time frame where we identify our zones. We look for the last break of structure. And if we're drawing out the structure on the 1 hour, we can see price was in this bullish trend. We then go from bullish to bearish, and price is forming this retracement. If I drag this down, you can see we had the break of structure occur around here on the 1 hour time frame. The last structure break happened around here. We have the overall break going from bullish to bearish, but the last structure inside of our overall structure happened around here. This is when we grabbed our box tool, we put it at the last break of structure, and we drag it towards the left and count the rejections. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 rejections towards this area of interest. We're well above 2 rejections. So this is a solidified zone. Next, what do? We use the 5-minute time frame to look for the switch of structure. Same thing, just on the lower time frame. So 5-minute time frame, we know that price has to do what, ladies and gentlemen? We have to go from bearish to bullish in order for price to have this retracement. In this case, price was overall still bearish on the 5-minute, so I wasn't too worried about the retracement getting established. Why? Because if price did have this retracement like we've done here, and then price just tanked towards the downside, I'm not finding an entry, ladies and gentlemen. Why? Because price never went from bearish to bullish and then back bearish, allowing me to see that break of structure. That's when we find our entry, with the break of structure going from bullish to bearish. If price doesn't present that, I don't enter. So I continue to wait. When price formed that retracement back towards this area of interest, we know that our lower high point on the 5-minute is around here. This is our lower high. We have lower high, lower low, recent break of structure on the 5-minute. When we drag this off towards the right, we see the break of structure happen around here. Price is now going from bearish to bullish. This is what I want to see, because now I can look for the bullish to bearish flip in order for me to find a position. So as we continue to wait, you can see how the original break of structure happened around here, going from bullish to bearish, getting back underneath this zone. But like we talked about, just because we have the break of structure happen does not mean it's ready for entries. Why? Because if you would have found your entry around here, if we zoom out and look towards the left again, you can see this area get treated as support, get treated as resistance, resistance, support, resistance, right? It's a well-respected zone. Why? Because it's our daily area of interest. We just talked about this. We just talked about this. We are in a bullish trend, but we are underneath this area of interest. You want to take your trades underneath your zones. This is like, if you're bearish, you want to be underneath both time frame, well, both zones. If you're bullish, you want to be above both zones. So right now, price is underneath one zone, being our 1-hour area of interest, and still above our daily zone. You continue to be patient. You can see how price goes from bullish to now back, well, bearish to now back bullish due to the breakout of these lower highs. If we continue to press play, you can see how we were patient and we allowed price to perform the break of structure to get back underneath this zone. This was more of a aggressive entry because we were above, but I wasn't too worried because the break of structure happened at this area of interest. So once price gave me this break of structure, I found my entry. Like you all know, I'm using what time frame to find my zone? The 1-hour time frame to find my zone, because I'm in a counter trend scenario, which means if I'm using a 1-hour time frame to find my zone, I'm using a 1-hour time frame for my take profit level, being my 1-hour lows. You can see clear as day, price gave us a beautiful 1 to 2 back in return, targeting those lows. I got a 1 to 3.61 because I allowed price to push a little bit further, but I'm not going to get into that. Press play. Clear as day, price hit targets with no problem, and as soon as I close my trade, what did price do? Reverse back towards the upside, and then retest, continue. Like, bro, it doesn't get simple. It's so simple. Breaking retest is so simple and straight to the point. It doesn't get better than that. I'm just sorry, but not sorry. It doesn't get better than that. Next example, and the last example, is going to be GBP NZD. This is more of a, I guess, advanced type of setup, because what you're going to see is that the daily time, well, no, it's not. All right, let's get into it. So GBP NZD, you can see clear, we can see clear as day, price is in a bearish trend due to the breakout of these higher lows. We have our lower high, lower low, and we have all these pivot points. Again, they're called pivot points because it doesn't present me with the break of structure of my lower highs or break of structure of my lower lows. If I don't have a break of structure, it's just pivot points. So we have lower high, lower low, break of structure, right? And what happened? We saw price get back above this area of interest. If I drag this down again, guys, it is so simple. We have the recent break of structure happen around here. I have my lower high being here, and then I have my lower low being here. Bring up the charts again. I know that the daily's bearish, so we're looking at the bearish trend. Are we below or above my zone? Well, we are above my zone. We're not at number one, or we could be at number one if the 4 hour, well, no, because you can obviously see the 4 hour is not going to be in sync. If you don't remember, if you go back towards the beginning of the video, I talked about what I mean by in sync. What I mean by in sync is when the daily presents me with a break of structure, I want to see the 4 hour present me with that break of structure. When the initial break of structure happens on the daily time frame and the 4 hour does not match that, we're simply not in sync anymore. Just simple as day. We're just not in sync. So right now, the daily time frame is bearish, and we have recently got back above this area of interest. Like all these pivot points, it's not showing me that price is, I wouldn't be catching a flow of the market trend. I want to be the first person to catch the breakout, the first person to catch the retracement, and the first person to catch the second move. In this case, the first breakout has already happened, the first retracement has already happened, and the first move back towards the downside has already happened. All this stuff now is just extra giving moves in the market. And I'm not really worried about catching a flow of the market trade. Why? Because I'm not the first person in. I'm the last person, the second last, third. It don't matter. I'm not the initial breakout, the initial retracement, and the initial push. That's what I look for. I did not have that. Now I know I'm in a counter trend setup. Why? Because I'm above that zone. My daily's bearish. I know I'm not going to be in sync with the 4 hour time frame. Therefore, I will be looking for a counter trend opportunity, meaning now I'm using a 4 hour, 1 hour, 15 minute, and the 5 minute time frame. I'm already at my given point in the market where I look to enter at the recent break, either the lower high or the lower low. Right now I'm at the recent break. Perfect. And like we just talked about, we are in a counter trend scenario, meaning I'm using a 4 hour, 1 hour, 15 minute, and the 5 minute time frame. The daily time frame has recently got back above this daily zone or the daily area of interest, which is good. Now I'm interested in looking for opportunities. If I go towards the 4 hour time frame, you can see how on the 4 hour time frame, price performed this initial break of structure. Price is bullish. We can see that. I don't have to draw that out. And then as price is bullish, we can see the initial break of structure happen towards the upside. If I go towards the 1 hour time frame, you can see this same thing, the initial break. 4 hour, the initial break. We are in sync. This is perfect. When we're in sync, we use our setup. So now I know that I'm in sync with the 4 hour time. I know I'm in sync with the 1 hour time frame. Where can I see the 4 hour retrace to? Well, since we are in sync and I have a cheat sheet, we identify our zone on the 1 hour. Well, the 1 hour time frame, the last break of structure happened around here. So we have the overall break of structure happen here, but the last structure break happened around there. I grab that box tool, we put it there, and we drag it out towards the left. Let's count the rejections. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 rejections towards this area of interest, solidifying it as a well-respected zone. So now we just wait for what? The switch of structure on the 5 minute time frame. So if I go towards the 5 minute time frame, like you all know, we have to do what? We have to go from bullish to bearish in order to form that retracement. Price is going from bullish to bearish to form this retracement, and we simply just wait for price to tap back into our zone. Once we can tap into our zone, you can obviously see we never tapped. I like to be very strategic when it comes to tapping back into my zone because I want to see that rejection. So if we continue to wait, boom, price taps back into. You can also see we are maintaining above our daily zone, and now that daily zone, and now above our 1 hour zone. And you can see how price on the 5 minute time frame has going from bullish to bearish to allow the retracement to happen. Now we simply wait for the next break of structure back towards the upside, getting back in sync with the higher time frames so we can ride this trade towards targets. So we click play, boom. You can see the original break of structure happened around here, but I wasn't left with an entry signal, and the second break of structure happened, giving us the entry signal. Now we clear as day, we see that we are above our 1 hour, we're above our daily, and price has recently gave us the recent break of structure. This is perfect. Like you all know, I use the 1 hour to find my zone, meaning I'm using the 1 hour higher highs for my take profit. In this case, you can see how price is bringing me back a minimum of a 1 to 1.45. This is perfectly fine as long as price, which I talked about earlier, gives you back, I don't know if I did, if price, when you're when you're setting up your take profit, if you set up your take profit and you're targeting those highs, the structure point, and the only thing you're getting back is a 1-to-1, that is perfectly fine. Price is showing you that this is a good risk to reward because, again, say if we're a scalper, people look for a 1-to-1. You're getting back in return what you risk. So off rip, if price does hit your targets and you want to close, you get back your 1-to-1. But like I told you, since I'm an intraday / swing trader, when I'm right about my setup, I allow my trade to run. So I want to see if price can reach my initial 1-to-2 risk reward and return. So if price hits that target of a 1-to-2, boom, I typically on the 4-hour time frame, I always look for 4-hour time frame. So as soon as price hits my targets, I go towards a 4-hour time frame. What does this allow me to see? Well, on the 4-hour time frame, if price can close above, if price has this beautiful break of my take profit, showing me a lot of momentum either towards the upside or downside depending on what position I'm in, I hold my trade until this candlestick closes. And as soon as that candlestick closes, I close my trade. I'm not being greedy. I got my extra profits and I close my trade. And you can see clear as day, we went from a 1-to-2 to now a 3.49%, all based off of structure and allowing price to do what price needs to do. Say if price was it hits my targets at my 1-to-2 and we see some type of wick rejection at this area of interest, simply close your trade. Price is showing you that it's slowing down in momentum. Stop being greedy. You got your reward. Close your trade. Walk away. Simple as day. And say if price does not give you a wick rejection towards your take profit and we form something like we've done here, you let the trade ride until the 4-hour candlestick closes. As soon as that 4-hour candlestick closes, I close my trade. Now we get back a 3.49% in return. And that's it. That's how you find your areas of interest. It's straight to the point. It's nothing more, it's nothing less. You don't have to make trading harder than what it is. That's what I was doing before, and I simplified it. So if you like this video, if you enjoy videos like this, leave a like, leave a comment, subscribe to the channel. Let me know what you think, because I will be posting stuff like this, giving y'all more insight, more game, I guess, when it comes to trading, and giving you just my strategy overall. So I'm gonna catch y'all later. Pray that y'all enjoy. Y'all have a good one. Deuces.